Intel, one of the biggest chip makers in the world, just had its stock price drop by around 20% over the past week. In this video, we'll take a look at what's happened and see whether this is a buying opportunity for this blue chip stock. So Intel reported its earnings last week, and its revenue climbed 20% over last year to $19.7 billion, beating analyst projections of $8.5 billion, while its earnings per share also increased to $1.23 per share, beating analyst projections of $1.11 per share by about 16%. So if Intel beat on both revenue and earnings, why did the stock drop so much? At the press conference, news also came out that their next generation 7nm chips will be delayed by a further 6 months. Originally, in an article released back in May of 2019, Intel were expecting next generation chips to launch in 2021. But right now, they are expecting first shipment in late 2022 or early 2023. In relation to that, they've also restructured their executive team, with the chief engineering officer leaving the company. One of Intel's biggest rivals, AMD, in comparison, they already sell the 7nm chips, and they are looking to take more market share from Intel. AMD stock skyrocketed by more than 15% after the news came out that Intel was going to delay its productions. Not only that, Intel also offered weaker than expected forward guidance for their third quarter results, with an expected revenue of $18.2 billion, a 5% decline from the previous year, and an earnings per share of $1.10, around 22% decline. Now, to see if Intel is actually a buy, let's look at some key statistics for Intel. So Intel has a PE ratio of around 9, and it is one of the lowest among all the tech companies. Generally, with semiconductor companies, you are looking at a PE ratio of more than 20. And one of Intel's closest rivals, AMD, actually has a PE ratio of more than 130. For Intel's financial statistics, they have a return on equity of more than 30%, which is really good. They have a current ratio of 1.98, which is good because they have almost twice the amount of current assets when compared to their current liability. They also have quite a healthy dividend ratio of 2.62%, so it is possible to use Intel as a dividend stock as well. In terms of growth rate for the next 5 years, analysts projected a growth rate of around 8.62% over the next 5 years, which is not particularly high for a tech company. As a comparison, AMD has a projected growth rate of more than 30% by analysts per year over the next 5 years. The price chart of Intel over the past 2 years is very choppy, with lots of highs and lows, so it is very difficult to pick out a specific price target for Intel. But if you are interested in picking up the particular stock, we have a resistance level around this area and this area, which corresponds to around the $46 to $47 mark. So if you're interested in picking up the stock, many buyers seem to come in around that price range. Despite Intel having engineering difficulties with producing their new chips, so they had to outsource a lot of the manufacturing process, Intel still leads the US semiconductor companies in both revenue and sales of chips. So if we look at the market share of AMD versus Intel, we can see that Intel still has almost twice the amount of market share compared to AMD in terms of all CPUs. In the desktop market share, it is a lot more evenly distributed. However, in the laptop market share, Intel still heavily dominates AMD. And also, it is the same in terms of server market share. This might change in the future because AMD is definitely gaining market share at the expense of Intel. So overall, Intel is going through some changes. They are like that overachieving student that constantly does well in class and passes without trying too hard. So over time, they kind of start cruising through class and not studying. And now they're kind of given a rude awakening when they realize they're probably going to fail their exams. As investors, you probably shouldn't expect a tremendous amount of growth in the short term due to their manufacturing problems. But as one of the market leaders in the semiconductor industry with a healthy dividend, they could be a good option for some long-term stable income. And don't forget, Intel has been the undisputed market leader for more than 10 years. And it is only within the last few years that AMD has really started to ramp up their production and overtook Intel. This is definitely a setback for sure, but with the vast resources that Intel has, they are definitely not completely out of the semiconductor race. But as usual, if you're interested in purchasing the stock, be sure to consult a qualified financial advisor. I hope this video has been useful for you, and I will see you in the next one.